Greg Afarian here, gregafarian.com and Virtual Media Realty, your full-service realtor in the Essex County, Greater Boston, and North Andover areas. How you doing? Hope you're well. Make sure you let me know if you want to see any properties. The home buyer tax credit's running out April 30th. You have to be under contract. So give me a call if you need anything. A lot going on this week with the Fed and talking about, again, the mortgage market meltdown. And I find it odd that we're still talking about what happened. It's as clear as day what happened in my mind. You know, there was a global rush in our country and abroad to want to get into homes. And especially in our country, everyone was buying for the wrong reasons, and that creates a bubble. But Allen Greenspan said it. He said it perfectly here. I really, and I'm a fan of Allen Greenspan. I really think that he.
As I noted in my prepared remarks, while the roots of the crisis were global, it was securitized U.S. subprime mortgages that served as the crise's immediate trigger. The rate of global housing appreciation was particularly accelerated beginning in late 2003 by the heavy securitization of American subprime and Alt-A mortgages, bonds that found willing buyers at home and abroad, many encouraged by grossly inflated credit ratings. The surge in demand for mortgage-backed securities was heavily driven by Fannie Mae and Freddie Mac, which were pressed by the Department of Housing and Urban Development and the Congress to expand affordable housing commitments.
Very well said, and that's really the truth of the matter. And I found it quite disturbing that Barney Frank wasn't to be found in any of these hearings. They basically Congress wanted to shove mortgages down everyone's throat, anyone that had a heartbeat, to be able to buy a home. And that really isn't the way the American dream was built. Citigroup had a bailout, and they paid this guy, Chick Prince, $125 million as a severance package. You want to understand what happened with the mortgage crisis. You got to get to the root. It's all corruption. These people are all corrupt. Greenspan is like the general on the side that everyone wants to blame. I mean, he, for years, had said that, adjustable rate mortgages, these mortgages that tease people to get lower, he was warning people about these mortgages, and, no one listens. I mean, it's unfortunate, but that's part of what happens. You don't really listen. Two key inflationary figures, oil and gold, are on the rise again. A couple weeks ago, I said that oil is probably going to hit 90, and this week it hit 87, closing roughly right around $85 a barrel. Gold is reaching $1,200. It's at $1,160 an ounce. And those are two inflationary figures that I'd want to keep an eye on. I think that the Fed will be remiss to, higher rates on an inflation watch and be more dovish to keep rates low. The chance that the economy doesn't grow as quickly as they're expecting. So I think that oil is a wild card. Oil is like a natural tax hike. So anytime oil goes up, you feel it in your pocketbook, you feel it at the pump, and that's a definite negative for the consumer. But the stock market has been doing quite well, approaching 11,000 as we speak. A lot of economists are shrugging off data, looking more closely at it. Even though retail sales, the consumer is getting a little bit stronger, I think that the key figure is that the consumer confidence is still at a record low, and the jobless claims figure that came out last week, up 162,000 jobs added. If you look at that number closely, nearly 60,000 of those workers were temporary job workers, Census Bureau workers. So a little bit of a smokescreen there. Unemployment rate is still at 9.7%. So I think that that's something to keep an eye on in the near future. And the next report, will probably tell a lot as to where the economy is actually going. 30-year fixed rates were up this week dramatically. There was a 10-year auction, 10-year Treasury auction, and the rates went up almost 1/3%. Right now, the 30-year fixed rate average for mortgages is 5.31%, and that's up from 5.04% last week. 15-year also went up 4.54%, up from 4.34%. So that's a big increase. Week was a pretty good week for the economy. And let me know if you need any help finding a home, if you have any questions, need any, anything, give me a call. Greg Afarian, gregafarian.com, and Virtual Media Realty. Out for now. Have a great weekend. Take care. Bye-bye.